Thanks, Chrissy, and thanks everyone for attending this great conference once again. We've only got about 10 minutes, so I'll try and flick through as quickly as I can, but I think similar to Andrew's just last discussion there, we are in the battery minerals thematic, and certainly in the moment everyone's sort of looking around at the month-by-month characteristics, but certainly it's a medium to long-term prospect for all of us. Look, at the moment we've been sort of oversold, I think, in the lithium industry with a lot of our other peers as well. So, but one huge thing on this slide is our strategic management and also strategic shareholders on the register. So we've got some really strong interest on our register and some really large strategic groups, which obviously is a good sentiment for the company. The board of directors, myself and Pat Murphy sit on the board, but also chaired by John Young, who is our non-executive chairman and the founder of Pilbara Minerals. Rob Longley, who's also around today, he was one of the existing directors from the company we acquired the assets from up in Ontario. Why lithium? We're still at the beginning of this EV thematic. I think similar to Andrew's just point there, the forecasts on EV uptake have actually been very similar with a lot of analysts and a lot of sentiment. But as you can see here, I mean, I think Pilbara Minerals put up a similar graph to this the other day. So we are still at the beginning of this transition, energy transition. So one of the biggest differences between us and a lot of the companies that are presenting today as well, though, is we are in Canada. And Canada is a completely different backdrop to Western Australia as far as how much investment is being spent up there, and all the OEMs and chemical manufacturers are really creating a complete supply chain in Ontario. 28 billion or 25 billion, 28 billion, whichever figure you sort of look at, is currently under construction. And that's a complete supply chain up there in Ontario. And green technology is right on the doorstep to be able to provide lithium concentrates and in the future lithium chemicals into that industry. There is a huge amount of government support, like billions of dollars of incentives and opportunities that are being pushed into the northwestern Ontario sector to ensure that mines can complete the whole mine-to-market EV supply chain all the way through to EVs being produced in Ontario. So what is our strategy? We've got a three-stage integrated strategy. Our absolute first call is to be the first producer in Ontario. We are planning to be in production in 2025, 2026. And currently we are on track to still achieve that. The second part of our strategy is to establish, along with strategic partners and larger operators, a chemical conversion facility. That is what Ontario is needing and what the government is also waiting to be deployed into the area, and they are looking to establish and support at least one, maybe even two chemical conversion facilities with very large grants and debt facilities. And our third part of the strategy is to continue to grow our resources at our Western hub, which certainly looks like a game-changing project for green technology. As I said, this is the supply chain that's building out. We're on the left-hand side, so mines, concentration, conversion, and then on the right-hand side in Ontario is CAM manufacturing, battery cell manufacturing from some of the largest manufacturers in the world that are setting up there. And they're actually producing EVs. So, I mean, where they're producing EVs is less than 1,200 kilometres from where our assets are. So it's a completely different landscape to what we see here in Western Australia. We've just recently released a PEA just before Christmas. We have, I guess, combined the two mines that we have to extend the mine life. That will just continue to grow, and the resource inventory will continue to grow as we drill them out. We did use a price that was probably a little bit higher than, well, significantly higher than what the current market pricing is, but certainly back in October, it was the current view. So you can sort of see in this lithium space, the price does swing very. There's some really large swings, troughs and peaks. But one thing we do know, and one thing I've been in this lithium industry for quite a few years now, is that it will be coming back. Don't ask me when, I haven't got the crystal ball, but there's one thing that is for certain: when it does come back, it will come back very strong as well. So we released the study, we've got some really strong economics. We're currently actually optimising that PEA, and we will actually be releasing that probably in the next few weeks as well, with some more current pricing and some adjusted economics on costing. So this is the first project. It's our Eastern Hub, the Seymour Lithium project. We've got about 10.3 million tonnes at just over 1%. We do have an exploration target there of still above 20 million tonnes. We've got extremely coarse-grained fresh ore from surface, so it allows us to go to a DMS, two-stage DMS only. There have been some projects that have employed DMS only in Australia and haven't probably worked as well as some people thought, but look, certainly we're continuing to do a lot of our metallurgical test work, and the ore bodies up in Canada are fresh from surface. As I mentioned, they're not weathered in nature, so certainly competent rocks holds up in a DMS-only situation. It's a zero discharge tailings site, so it's very environmentally friendly. We are moving forward to a DFS this year, and we are looking to a financial investment decision before the end of the year, along with receiving all our permits to basically develop the mine. And that will be the first lithium mine in Ontario that's been permitted. The DFS that we're working on now does actually look at some pit optimisations, and looks we will be using much lower costing and pit shells for the whittle optimisations, down to probably $1,000 a tonne. One thing that we're quite comfortable with is that we do have at least 6 years of mine life there. With the surrounding deposits, we think we'll be able to extend that, but it certainly is quite profitable from what we can see at the moment, and we will be studying that further. The ore body dips at sort of around about a 45-degree angle, so strip ratios probably are a little bit higher than we'd like, but certainly they still provide some good economics on the extraction and processing. Here's the resource growth that we're talking about. We've acquired some assets about 20 kilometres to the east. We've already had some really good success there in establishing what we think could be another sort of small to medium-sized deposit, which could extend the mine life by probably 2 to 3 or even 4 years. There are multiple other deposits and opportunities in the area as well. So it is going to be a bit of a district or a camp or whatever you want to call it in the area. We will be permitting the one processing plant, and there will be plenty of opportunities to increase that mine life. This is the conversion facility that we're looking at and studying. For a junior of our size, to be an integrated developer, I guess, is quite a large pill to swallow. But certainly we won't be doing this ourselves. We're talking to multiple large conglomerates and operators that actually produce lithium chemicals currently. And we will be looking at partnering with those types of companies in the future to not only study but also to use their flow sheet and technical expertise, and obviously their balance sheet to help develop this conversion facility. There is a huge amount of interest. Ontario itself and to Western Ontario could provide 50 to 60 years or even 100 years of lithium supply chain material. So it certainly is a very, I think, well thought out supply chain from the government, and I guess them now pushing this into the mines in the northwest as well. So this is I think the game changer for green technology. Look, we've only been drilling here for 12 months. It was a very small, modest resource when we first started. We've now established up to just under 15 million tonnes here at Root. Specifically, the Root Bay project itself is really exciting. We've just discovered Root Bay East, which has a lot more opportunity to grow the resource to the east. Here it is here. We've got further underground extension potential to be tested, definitely continues at depth and still holds its grade. So we think that Root Bay could be, quite a large resource itself, and we will be updating the market, I think, in the coming weeks on a larger exploration target. And certainly on, I guess, our thoughts geologically of what this may contain. But this does look to be like a 15 to 20 year mine life, and it certainly will be become and underpin a lot of the feed to the chemical conversion facility that we will be looking at in Thunder Bay. So what's next for us this year? It is going to be a very exciting year. We are optimising, I think, our spend, and we'll be holding drilling until the second half of the year. But we're continuing with basically the DFS work. We've completed all the drilling for Seymour, so there isn't another large spend to complete that drilling for the DFS. We'll continue all our financing structuring. We'll continue our permitting activities and ensure that we are progressing towards FID towards the end of the year. Conversion facility, we'll be finalising our partnering process, and then towards the end of the year we'll be continuing to drill at our Western hub, which is the Root facility. One thing that certainly does stick out, I think, in the lithium market as well, is once the heat does come back into it, we are pretty sure that the money will flow to the nearer term producers, and certainly with green technology metals, we will be the next near-term producer in Ontario, well, the first producer in Ontario, and probably the next one in Canada as well. So, thanks everyone.